What's up, guys? It's Amma Jamma here, and I am back for another 5-minute hitter video on how to properly identify reversals using order blocks and volume. We're going to go over a couple examples we've had from the past few days, and namely the SPY. So I deleted everything on this chart except this right here. So if we're looking at this chart right here, before we even start, we're on the hourly chart. Now this is to play like day trades, possible overnight swings, stuff like that. And we're looking at the hourly chart for the course of about 30 days or so right now. About 45 days. So we can clearly see a couple things, and the things that we clearly can see is the following. So the first thing we could definitely see is, let me block this, is the reversal points. We got one here. We have one here. These are our pivot points. This is where reversals happen, okay? So when we're really looking for a chart, we're looking at specific places. Here, these are reversal points. So this is what matters. These are the points we care about, we give a shit about. All this chop within the range, it's great and all, but it's not true reversals. A day down, a day up. These are pure pivot points. This is places where the stock actively reversed for multiple days or multiple percent, so on and so forth. Okay, so these are all our pivot points. So if we were to go back to this bounce, when we bounced a couple days ago. All right. So when we bounced was it yesterday? 2 days ago. So Tuesday, which is right here. All right. So it's during the day we were selling off. Let me put this on the 15-minute chart. The other day we were in the Discord and we were selling off and we were starting to bounce. And we're trying to identify a couple things. How do we know when it's a bear trap, bull trap versus reversal? There's a couple obvious answers, popping a fibs from daily open to the low, which would have been right here at that point, and waiting for the 25% break. All sorts of different methodology we use in the Discord. But for my specific purpose, the first thing I want to know is, what's our major levels? What are we looking at? So I've got the 15-minute on right here, and I can immediately see, and remember, this hasn't happened yet, all right? None of this has occurred yet. This is all not happened. So that's, the day ends right there, okay? So as you see, we can see here a few bounce points, and these were pivot points. This is where we bounced. So what we did is we took a little box here, because none of them are exact points, but we took a little box here and we highlighted these areas, all right? And we could tell this is what we would identify as a hot zone. This is something I would identify as somewhere where we have consistently bounced and pushed back up. Okay, so that's step one. So we already know as we're coming down here, and we had our first sell because we're looking, this is for day trades / possible overnight trade. This isn't for a long-term trade. The specific purpose on this trade was a day trade. All right, because how many people on a chart like this are going to take an entry right here? All right, let me delete this box. And into the day Tuesday, take an entry right here just to get caught, or get 10-15% and leave because we came down. This, that, the other, whatever it might be. How many people get caught on that? What can we do about that? What can we use as confirmation? I'll tell you what we could use as confirmation. Order block or clearing out the algos confirmation. And what does that mean? That means in any major pivot points or bounce points like this, all right, remember, this is right here we're talking about. Going back and finding the most recent low during the day, not pre-market lows, during the day lows. And that would be right here. All right, this was the last place we bounced heavily and had a decent, reasonable reversal afterwards. So what that tells us is, what's the low point of this candle? The low point of this candle, all right, if we go back to it right here, is 590.50. Okay. So the low point was... So what does that mean? That means at exactly 590.50, there is orders sitting just below that area. I'm not talking about way below that area. I'm talking about just below that area. So at 590, 49, hitting that price on this sell-off, all right? Because remember, we're going to go back. We didn't hit this point yet. This was our confirmation point. So we are ignoring. We are not concerned with this right here, okay? This all didn't happen yet, okay? We're at this candle right here. So I want to reiterate that again because I don't want you guys to get confused, all right? So what happened? So what happens at this 590.40, which is the last true pivot point that we would go back and we would look at on the chart, which was indicative of a full reversal where we pushed up to 608. So an 18-point reversal, 3 to 4% on the SPY, substantial. That means everything below 590.40. So if we were to hit 5, what we need to see is 590.45. 590.49, excuse me. Because what happens there is there's order blocks. What that means is for people that took a long here or took a short here and are underwater, they have their stop loss set just below this wick or just to sell at break even, so on and so forth, because we're finally back at this area. That was the last major pivot point. Or people are stacked up ready to buy just below that, and we cross back above it. So really what we want to see is the following. We want to see this. We want to come down to this low in a relative time frame. Remember, I'm on an hourly and 15-minute chart. We're talking about a day trade, possible overnight 2-day trade, something like that. So what we want to see happen on the time frame indicative of your purpose of your trade. What's the purpose of the trade? What am I looking to accomplish? Am I trying to hold this for an hour, 2 minutes, 10 minutes, so on and so forth? If we're scalping on the minute chart, obviously we're not looking at something 5 weeks ago and waiting for 15-minute confirmation. But for this specific purpose, we would want to see the selling go below that, even just 1 penny. All right, come above, test it and hold the 590.50 and push up. That is the confirmation we are looking for right there. All right, so we have identified 590.49 or lower is where we could feel confident that with a volume spike and a confirmation, that should be a reversal place to take a long reversal entry. So what happened Tuesday? All right, let's look. Because if we're day trading or holding for an hour or so on and so forth, let's put on the 5-minute because we're really looking at day trade, maybe overnight trade. Okay, so if we were to take this entry here, say at the break of whatever major level, say you're playing a level where on a 5-minute chart you want to see it break up above. So right here we take that entry. We end up only getting this teeny tiny bit, AKA a little bit of a bull trap there. Sure, you could get 10, 15, 20% on the weeklies, this or that, whatever, but it's not the ideal entry. And why isn't the ideal entry? Because what's our low on this? Where did we come down to? We came down to 590.51, as you can see up here. All right, look at this area up here. It's where our volume is. Let me put a candle there. You're going to look right there. Now let me highlight it again. See that? 590.51. So we came within a penny of clearing that algo, but it did not happen. It did not happen. So I felt like the imbalance was still there. And because we came, once we get within a few pennies, so on and so forth, it started to act like a magnet. And I knew our magnet said, nope, we need to come down and clear these out. And then the volume will kick in on the other side. All right. And if you want more in depth about order blocks and what it means to kick in on the other side, this, that, we have a Skills Lab 2 coming soon. This is more intricate skills stuff. I'm just doing this for a super quick video. So as you can see, we held off then in Discord. We did not take the swings yet. So what did we get from there? We're on the 5-minute chart. What did I say we wanted to see? We wanted to get the order blocks cleared out. Ding, ding, ding. We got it. Remember this yellow line. Look over here is our 590.50. So we got it. We dipped back below. And then we opened up here. And remember, our candle opened here. The lower part of the body is where it opened. All right. So we dipped above and we opened above it right here. We opened this candle 590.55. But we wicked down below it. That's our confirmation. So the second we get this 5-minute candle close or whatever time frame you're working on that works for the trade, for this trade it would be the 5-minute, that is where we take our entry. That's our confirmation. All right? Because what happened is, and we could even put it on the 1-minute to really get into the nitty gritty on this one. Okay? We can see how. All right? Because remember, this yellow line right here, I'm going to make it thicker for you. That's our 590.50 line. We came down. We did not hit it. We came to 590.51. Came up. And then right here, we hit it. And look at this. See how we get this volume spike right here? We had this nice volume spike as well as it dipped down into there. And then we hit it. We cleared it out. So that reset the algos. That meant everything waiting to determine whether a buy or a sell was reset. It's no longer an order block. It's no longer a wall. It's no longer the bounce point. We have cleared it out, and now we get to decide, are we coming down further or are we going up? All right? And for our specific purpose, I showed you on the 5-minute. Now I'm on the 1-minute. We dipped above it. And remember, I showed you on the 5-minute, we closed that 5-minute candle above it. Next candle opened at 590.50, 63, something like that. Then we dip below it and back up. So this right here is like, this is the Grand Pumbaa right here. We got the dip below and we pop back up. All right? That was our confirmation trigger. So right there, we're happy. We're ready to take the trade. And then our confirmation for taking the trade is that next 5-minute candle. So that means, remember, we're going to go over this again. Right here, we dipped back below it. And then we pop back up. And as this candle closed, there's our confirmation. So if we take entry right here on this candle, we have a perfect setup. Because what happens is, we have a 5-minute candle open and close below that order block area, our 590.50, we're out. So at most, our risk reward blocks is going to be here. All right. At most, it would be down here at this wick. All right. And our entry was here. Let me slide this up. And then how do we determine our, oh my God, why is this acting weird? It's not letting me slide up. I'm going to get a new one. Sorry, guys. So our entry was here. And then we know our stop loss is at most here. All right, at this wick down candle. Now, we won't know on day trades specifically, we'll want at least a 2-to-1 risk reward. And then we're really getting into the nitty gritty now because what's our target level? Where do we trim? So on and so forth. Woo this, woo that. So even if super conservative trims, if we took super conservative trims as the first place, the last place we had rejection, our last pivot point, which would be right here. Say that's our target 1. That's our worst case scenario target. right there is coming up and testing that area. And then our better case scenario target is going to be on a fibs, because it was a clean downtrend. So we like those fibs, is going to be the 618 for target 2. So we've got target 1 here. We've got our target 2 here. All right. And then we know our stop loss, and we just slide up along the way. So if our target 2 is the 618, we've got a nice risk reward there, 2.44 to 1. So for every dollar risk, we're expecting $2.44 profit. And that, my friends, is one example of how to use those order clearouts in your trading. I've got another one too, more of a day trade one. We're going to go to Apple. And this one I want the 5-minute, because this is short term. This is a day trading type one. And it's pretty much the same thing here, okay? So the last couple days, just looking at these 2 days specifically and what we would look for on the trade, so on and so forth, okay? So if we're in the market open this day and we're on the 5-minute chart and we're trying to determine longs or shorts, so on and so forth, same exact thing. So our previous high point, very short term, I'm looking 5-minute whatever, short or shorter. Our previous high point was 248.86. So it's the reverse here. We've got 248.86. And we know we need to, the reverse of what we did on the other side, we need to break it to the bull side and then slip below with confirmation. All right, and we didn't get it here. But then the next morning, look what happened. So we slipped above it right here. We cleared out the order books. We cleared out the algos on this candle. All right. And then remember, our confirmation is the candle open above it. Or the next candle open, excuse me. And on this, put on the 1 minute for show our confirmations here. All right, so we're right there. So we cleared out the algo from the day before, that relative high. And then we cut, which is that yellow line. And then we come up here, we pop over it, we dump below it, and we close. There's our confirmation point for entry. Our entry is going to be right here. Because this one, I like the 1 minute. These are scalps right at the beginning of the day, so on and so forth. There's our candle open. All right, right there. Perfect for a short. And then our stop loss is obviously going to be at this wick high right here. So if we're doing a short entry, all right, and we take our entry right here. And then our stop loss is here. And then as far as identifying our take profit targets, for this one specifically, if we're not using fibs, so on and so forth, we're identifying major pivot points from previous days. So our major pivot points from previous days, as we could see right here, is here. All right, we can see this is a major pivot point. So if we identify this, which is interesting because, as you could see, it was somewhere. We had rejection right here, which would give us confidence to hold the trade for the best part of the trade. Because if we take the entry right here, like we talked about, okay, and our stop loss is here, even this candle up, all that is a bull trap. All that is a bull trap, guys. We didn't even get a candle close above this algo point. We might have dipped above it for 1 second. We got the candle close below it. So, in fact, if you miss the trade here and you decide, I'm going to take the trade here, boom. And now what's beautiful about this, so we have our identified level. We take the entry here. And we also know this is a pivot points. This is a major level we're looking at. And then what's the next pivot point? Right here was a heavy bounce point the day before. And right here. Even those three. And then right here. Okay. We've got 4 levels. So we take that down. We can see, oh, we bounced off this pivot point. But here we have a lower high. So we can excuse holding the runners. Or, same thing. That's another pivot point. Did we clear it out? Whatever it might be. But even worst case scenario, if we played it down to here, and we took the profits down in this area here, even that right there, the worst case scenario, we've got a 1.62 to 1 risk reward, so we're getting $1.50 for every dollar risked. And if you have runners in here, and we did reject that next point, which is right here and right here, look at the next dump all the way down. And then we have our runners in a trade that goes 4 to 1 risk reward for $4. So that's just a smaller, like on the minute frame variation of that type of trade. If you want more information, check us out in the Discord. My link, Amma_Jamma on X, and you'll find my Discord link in the bio. Thanks, guys.